Well, hello again, Solis Wealth family. Greg Solis here with our update. On the family front, everybody's doing good. Nicole is flying down for the client appreciation party, so make sure you don't miss that party. It's going to be a good one. That'll be on November 4th. Hope you're there. She's coming out to celebrate her 21st birthday, so that'll be an exciting time. So she'll be here. We'll be able to celebrate being with you, and so we're really excited about the client appreciation party. Jack's doing great, playing a lot of tournaments. Great to see him working hard on his game. And Emily just finished her senior year golf career. So she played golf. She played a couple of times. She did great. I was so proud of her to just walk out and play golf on the high school team. So she's doing well, and everyone in the family's moving right along. So I hope you and your family are doing well also. Market-wise, continues to be incredibly volatile. I mean, it's just been nutty. A lot of times when you see this kind of volatility, it's because we are finding the bottom. It's not uncommon to see this where you get these huge swings both on the upside and the downside. Unfortunately, the trend line this year has been all down. As a matter of fact, as you've heard me say, the S&P 500 peak to trough has been down 25%. The NASDAQ peak to trough down 35%. So blended rate between the S&P 500 and the NASDAQ, I mean, we're down about 30% or so on the stock market. So that's tough. This is a pretty tough bear market. But as I've said, the more challenging part for our conservative investors is the bond market. Interest rates have spiked up. The 10-year treasury is now at about 4.2%. Goodness gracious. And then we're seeing the short end, the 3-month treasury, up over right around 4%. So we almost have what's called an inverted yield curve between the 3-month treasury and the 10-year treasury. That is usually, that inverted yield curve on that scale typically is pointing towards a recession. That's the big question. Is there going to be a recession in 2023 or not? With the Fed raising rates the way that they've been raising rates to slow down the economy to try to get inflation under control, the concern is, are they going to throw us into a recession? No doubt about it. They are willing to sacrifice growth to control inflation, and that the Fed has been very aggressive on that. And so we've seen Fed funds rate go up dramatically. We're anticipating there'll be at least 2 more of 75 basis points or more, 0.75% roughly. So we're expecting that probably in November, maybe by year end, another one. And the Fed has been clear. They'll continue to raise rates until inflation gets under control. So as I've said before, inflation is a big issue. They want to control it, but the concern is, do they throw us in a recession in that process? So the market's trying to price all this in. The valuations, we're seeing earnings come out. Earnings have frankly not been bad, but there's been a lot of lowering of earnings expectations. So the market has to price all that stuff in. But I feel like we're getting towards the end of this thing. I've been doing this for 30 years and they're never fun. When you have both the stock and bond market down together, that makes it tough. We've had 3 quarters in a row where we had both stock and bond down at the same time. It's been 187 quarters since we've seen that. So it's made it pretty challenging, but it feels as though rates are starting to top out a little bit, which means the bond market should stabilize. And then we get to invest into these higher yielding bonds. That's good news. At the same time, stock market seems like it's getting close to a bottom. We're buying at a lower price, and hopefully we'll ride that thing back up when things turn around. So be patient, hang in there. If you need us, you know we're here. Other than that, again, my very best to you and your family. Hope to see you at the client appreciation party. God bless. Talk to you soon.